you're doing fine. I hope you're doing wonderful. I hope you're discoing. This is both market brief and a gold technical analysis brief or update. As I stated last time, I hate to be that guy that bears the bad news. Now I'm the good guy that brings the good news. Beautiful. So my thesis, my executive summary here: gold and the market are in tradable bounce right now. Okay, so that was the conclusion. Let's talk about the analysis. The good news here is that the USD DXY is very bearish, so that means that there's no risk haven. People will not go run for the dollar, and they will go for the riskier assets. Now, this is the Euro USD in the weekly time frame, even though the week is not ended, didn't ended yet. But we are extremely close to have a bullish MACD in the weekly time frame. And every time this happens, a gold rally happens, and people run to riskier assets. If we close like this, this Friday, that worst is behind us. Beautiful. So you could check it on your own time and check every time this bad boy do a bullish crossover, both gold and the equity market rallies. I'm talking about since 2020. Good deal. So let's talk about the VIX. As I stated last time, we had a bullish setup, which means bearish for the equity market. But now we had a retracement. We had an ugly shooting star that almost got to unchanged. It was really all the way up to the VIX value, that is up to 23.33. Now it's 19.36. Maybe it goes below that too. Let me check that. Okay, 19.40. Okay, so we hit the 62% Feb retracement from this high to this low. So it's right here with the shooting star. Although these indicators still bullish, but comes tomorrow, these things will switch to the bearish mode, maybe maximum on Wednesday. So every time this happens, a rally in the equity market follows. It happened here. It happened many ways. You could check it on your time on 20th of December, 2021. So we are due for a rally. Good deal. So this is now TLT in the daily time frame. And as I tweeted last Friday, we may have a tradable bounce, tradable bottom in TLT, the ETF for bonds. So this is ABC. Okay, we bounce from a buyer zone. C is the 127 Fibonacci extension of A to B, and after an extreme sell-off, there is nothing wrong with a bounce or tradable bottom. We had, I think it's thrusting. It's a bullish candle. It's thrusting. It's a rejection. It rejected lower price and closed in the middle of the candle. Okay, good deal. So I talked about the Euro USD in the weekly time frame. I talked about the VIX. I talked about TLT. Let me talk about that. Dow Industrial. Good deal. Beautiful. Okay. So we've been going through tough times since the beginning of the year, and now we had an amazing, beautiful hammer that came from an older price memory. This price memory right here, with this old resistance, became support. Okay, so there's nothing wrong with the tradable bottom with high volume. So a lot of sellers just sold last week. It is amazing how it's always too late whenever the financial channels talk about a correction or a bear market. They were talking about 20% correction this year and all this stuff, and it is too late. It's amazing. And they get paid the big bucks. I don't know why, but oh well. So So a hammer that came from an old resistance became support, and we are due for the bounce in the Dow Industrial. Talk about the cues. Oh, Madonna mia. As if you focus on my theory, my finding on the MACD and the Qs, the least was 1%. The average is about 4%. If you average these three, so 5, 11, 12 divided by 3, yeah, so 4%. And we went down even more. We rejected lower price, and old resistance became support with a beautiful reversal candle. We're due for a bounce in the Qs. Okay, so let's talk about the currency of God. Oh, Madonna mia, gold. This is GLD, the ETF for gold, mighty gold. And as I stated last week, it was really bad when you had negative divergence between the price action and the stochastic, and it went all the way down. So now we corrected the negative divergence, and we've been trying to base for 2 days, and now we broke out. We broke out. As you know, if you know me, if you're Kareem Abdul-Jabbar, gold is not an independent asset because of the bounce in the euro and the bounce and the bonds. Now gold is bouncing. We are due for a gold rally this week. All right. So this is bear gold or gold. Take a simple gold. If I'm bullish on bear gold, I'm bullish on GTX, GTXJ, every gold mining ETF. Okay. So bear gold today made an extreme morning star after 2 days sell-off. We had a doji and a bullish Rami, and we concluded that with a beautiful morning star. This is a monstrous morning star. And why do I think the rally would continue? Because we have an upsloping 20 and 10 day moving average, and they're still in a bullish formation. Beautiful with and also the stochastic now is correcting itself and it going back up. So my sentiment in gold miners is the best is yet to come, at least this week. So we're gonna hit at least 19, and I'm suspecting even more. So please like, if you like, share and subscribe, and do remember the disco is forever.